Good morning, this is the latest market news. I'm Uliana. Asian stock markets are mostly trading lower on Friday as the weak news overnight from Wall Street and the decline in crude oil price weighed on sentiment. While the Swiss National Bank's surprise move to scrap its currency cap on the franc versus the euro added volatility to markets. The Swiss National Bank said Thursday that it has ended the 3-year minimum exchange rate of CHF 1.20 per euro. The move is seen as precursor to the European Central Bank further weakening the euro by the anticipated announcement full-scale quantitative easing in the coming months. Australia's ASX 200 slipped 0.2% and South Korea's Kospi index retreated 0.5%. At the close in New York, the Dow Jones Industrial Average fell 0.61%, while the S&P 500 index lost 0.92%. Gold prices eased in Asia on Friday, driven by shifting sentiment on the dollar and the timing for a rate hike as widely expected by the Federal Reserve later this year. On the COMEX division of the New York Mercantile Exchange, gold futures for February delivery fell 0.20% to $1,262.30 a troy ounce. Overnight, gold held on gains to trade near a 4-month high on Thursday, following the release of a mixed bag of US data and after the Swiss National Bank lowered interest rates further into negative territory. The Australian dollar is trading high against the US dollar following upbeat local jobs data on Thursday. In early trades, the local unit was trading at $0.8221, up from $0.8212 on Thursday. Today's data calendar lacks high-impact entries, and after yesterday's Swiss shock and ahead of the next week's critical meeting of the European Central Bank's Governing Council, economic data will probably play the second fiddle. Yes, Consumer Price Index 1330 GMT. Consumer prices are expected to have fallen by 0.4% in December, but core prices, which exclude the more volatile goods and energy prices, are expected to have risen by 0.1%. From year-ago levels, consumer prices were up 1.3% in November and core prices up 1.7%. As long as inflation remains contained and the US strong, the deteriorating outlook could lead the speculation that the Fed could delay its first rate hike by a couple of months. It was the latest market news provided by ICO FX. Goodbye.